welcome to Dragonfly Trading. Today's video is going to be a sequel to my free strategy video, Double Your Account in 30 Days. This video is going to do a little bit of a review and also some more advanced strategies that I have learned or basically decided to go ahead and release and hopefully help more people be successful in their trading journey. So if you do not have the original, you can get that in any link under one of my YouTube videos, which leads you to my website, and you just type your email address in and you have it for free. So starting out, basically, there are some basic rules to this, and I have made a cheat sheet that is attached at the bottom that basically goes over everything that we're going to talk about today. So to start out, there are 3 basic rules to any long or short trade. And definitely for beginners, you need these 3 rules. They must be there to take a trade. Otherwise, without experience, most likely you're going to have a lot of losses and get discouraged and think that this doesn't work, and it absolutely does. I have doubled my account multiple times with this. So we're going to start out on the Forex and show several trades on the Forex, and then we're going to jump over to crypto and show several trades on crypto. So the first number 1 rule is go out to the 4-hour and identify the trend. So here on Euro US dollar, we go out to the 4-hour. And obviously right now, the trend is to the downside. The second rule is to take a short trade. You must be hitting 70 or above 70 on the RSI. To take a long trade, you must be hitting 30 or below 30. The third rule for beginners is you need divergence. If you do not know what divergence is, there's many videos on divergence, and I'll actually attach a cheat sheet for that also. So divergence is basically here we have a higher high in price, and here in the RSI we have a lower low in the RSI, or I'm sorry, a higher low in the RSI. So all 3 things are there. We are at 70 or above. We are out of the band making the pattern, and we also have divergence. So your entry on this trade is here, not here. You want to enter on the divergence. So I'm going to move our little marker over, and this is our entry. Now I've had a lot of questions about stop loss. When you enter a trade, your stop loss is based on your risk to reward. If you don't know how to calculate risk to reward, I have a video on that also in my playlist. It is a very important thing to have If you don't have it, I highly suggest you start using it. So this trade right here on the 15-minute time frame is where we enter. Now, as long as the RSI is dragging the band down with it, there's no reason to exit this trade. But as you're in this trade and you have these spikes to the upside, it's going to scare you. So we're going to go over that. So right here, we had this major spike to the upside, and it would have scared you, making you think that this is going to the other side of the band. What do you do about that? Well, you move your marker over to that spot, and you jump up to the 1 hour, and you take a look at where on the 1 hour is currently the RSI. And on the 1 hour, it has made the spike out of the band. It has crossed the red line. The red line is your signal line, telling you that you're on the right side of the trade. And it is clearly has plenty of room to go to the downside. So all of those little spikes up and down, going up to the 1 hour, just confirm to you that this is going to come back down. And you can do that same thing with each one of these spikes to the upside. As long as you're remaining under 50 and pulling this band to the downside, there's no reason to exit the trade. So now on the 15-minute, we get to the outside of the band. This is where you have a decision to make. Now remember, this is the decision that you make. Do I have enough profits and I want to take my profits and look for my next trade? Or do I want to try and stay in this trade longer? Now remember, you cannot see any of this. And I want to emphasize that the key here is not how long you can stay in a trade. The key is profits. So you do have a decision at this point to exit, take your profits, and look for your next trade. Or when you get to the bottom of the band here and it's coming out on the 15-minute, you go up in time frame to the 1 hour, and you take a look at where it is on the 1 hour. So at that same point on the 1 hour, this was clearly out of the band. What do? Well, you can go up another time frame to the 4 hour. On the 4 hour time frame, we are just crossing the signal line, and we are also crossing into bearish territory. Bearish territory is below 50. Bullish territory is above 50. So in this trade, you can still stay in this trade based on this 4 hour. So you continue the trade until it comes out of the band on the 4 hour. You do not jump back down to the 1 hour or the 15 minutes at this point. Now you are trading off the 4 hour. Every time you move up in time frame, you are no longer looking at the lower. You are now trading on the 4-hour. It comes to the bottom of the band and it starts poking out. You have an option to exit or move up a time frame. You move up a time frame and the 8-hour is clearly sticking out. In my trading style, once it is sticking out on the 8-hour, I'm exiting. You do have the option to go up higher in time frame if you would like to the 12-hour to see what it is doing. On the 12-hour, it's touching the band. I would say exit the trade. So in that scenario, I didn't mark our entry, but I believe we caught this in this part right here. I can't remember. But that is the concept. Now, I'm going to put on the rest of this euro. As you can see, we didn't have much more downside before we reversed the trend. Okay, so let's go over along. What are the rules? So if you're going to start out on the 15-minute time frame, you're going to move up to the 4-hour and see what is our trend. Our trend is now to the upside. Well, you wouldn't see this. Okay. So let's move to the 15-minute. Where are you? There it is. Okay. So this is a case where we reversed the trend. So what are our rules? Our rules are, number one, a band, out of the band, and divergence. Here is our out of the band, below 30, and here is our divergence. The 3 rules that we must have: below 30, out of the band, and then divergence. So this is our entry. Stop loss based on your risk to reward. On the 15-minute, we come out the top of the band. Right here. You have a choice to scalp and take your profits. At that point, you have a choice to take your profits or try and stay in the trade. And what do? Well, you move up in time frame. You go up to the 1-hour. The 1-hour is out of the band. So you move up to the 4 hour. The 4 hour is coming very close to the band, but it's not quite out yet. You move up to the 8 hour. The 8 hour is crossing the red line. So as you can see on the 8 hour, we have plenty of room. So now you are on an 8 hour time frame and you do not move back down to the 4 hour, the 1 hour, or any of the lower time frames. When the 8 hour comes out of the band, which is right here, you can clearly see that it is dragging the band up with it, and it is also just crossed into bullish territory. The yellow trend, this shows you the trend, is turning to the upside. There's no reason to leave this trade just yet. If you are unsure, move up a time frame. On the 12 hour, we were here. We've crossed the red, we've found support on the yellow, and we're coming up. So as long as your 12 hour is pulling this band up with it, I would not exit until it reached the 70 mark. Or I was seeing bearish divergence. So right here, we do have bearish divergence between these 2 points. It's a very high time frame. I don't even like really going over the 8 hour. But as soon as it hit the 70, I would have exited. And you would have caught this entire move, which is 391 pips. We're going to go over a few more to make sure that you understand. Let's move over to ETH. It's the same concept. On the 15-minute time frame, you need a hit to 30. Oh, I was actually going to start over here, I guess. Now I'm going to start here. So we had a hit to the 30 out of the band. And then our third rule is divergence. So we have all three. So our actual entry is here. Stop loss based on your risk to reward. When your trade gets to the top of the band, which is right here, you have a choice to exit, take your profits, or move up to the 1 hour. On the 1 hour, it has crossed the red signal line. You're on the right side of the trade, and you have plenty of room in the band. There's no reason to exit. Now, you do not go down and time frame again. You are on a 1 hour now. When the 1 hour gets to the top of the band and comes out, which is right here, you have a choice to take your profits or stay in the trade. You move up a time frame to the 4 hour. The 4 hour is just touching the band. So you move up to the 8 hour. You move up to the 8 hour, and I want to say that it's touching the band too. It's hard to tell. So what would I do in this situation? I would exit. Why? Because the 8 hour is showing now divergence, bearish divergence between these 2 points. I would exit. I don't really like going higher than the 8 hour time frame. Not that it cannot be done, it can, but I usually don't go higher than that. Let's talk quickly about stop loss. So we entered sorry about the dog barking, guys. Can't do anything about it at this moment. Okay, we entered here. Okay. This was our entry, not here. This was our entry. We enter on the divergence. Now, the only time when you jump up time frames to the 1 hour, to the 4 hour, to the 8 hour, the only thing that you are going down in time frame to look for is where to move your stop. So we started here and our stop was at the low. After it made this correction and it broke the high, your stop loss gets moved up. After it made this major correction and broke the high, your stop loss gets moved up. After this correction is complete and it breaks the high, your stop loss gets moved up. After the next correction and it breaks the high, your stop loss gets moved up. Correction, breaks the high, stop loss gets moved up. Correction, breaks the high, stop loss gets moved up. So the only reason when you're staying in a trade to move down to a lower time frame is just to move your stop, not to look at your TDI. Because if you would have looked at this during that whole trade, you would have definitely probably gotten fearful and exited. So like I said, again, once you get to the top of the band and you move up in time frame, you no longer are going down to that lower time frame for anything other than to move your stop loss. It is just when you, I'm sorry, got a little jumbled up there on my words. Higher time frame to see if you have more room in the band. Once you move up to that time frame, that is the time frame that you are trading off of. Once you move up to the 4 hour, that is the time frame you are trading off of. The lower time frames are no longer to look at the TDI. They are only to move your stop. I hope that this was helpful. I hope that it was clear. This is attached below with the rules. Let me know in the comments what you thought about this second video, and I hope that it helps a lot of people. And I want to say thank you to every single one of you that got my strategy video and that follows me on YouTube and supports me every single day, because I appreciate it more than anything in the world. And I hope that you have a wonderful day.